what exactly is it that gives a trade edge? Now, edge comes from two different things. There's tangible edge, and this is edge that you can gain by having a better usage of tools, combination of tools. And the whole point of using certain tools, indicators, is to basically inform what you're already doing better. That's where you can gain some edge. But on the whole, a lot of edge, and this relates back to the previous session, a lot of edge in that sense is almost leaning towards what I call statistical edge. You're giving your trade a higher probability of working, which is great. And that's, you know, one of the things that you always want to be trying to do. But then there's also intangible edge. And this is then using not just indicators, but it's considering structure of markets. It's considering the potential that a market has. And also this then leans into the, how exactly do you access a trade? How do you take the trade on? So what I mean by intangible edge is this is things like leveraging position. When do you do it? Precision on how you enter a trade. And this isn't about saying, right, I'm going to buy it bang on that level. It's about the precision that says, yes, now is the time. So we're going to go and have a look at that. Look at an example, one that I showed a brief version of the other day as well. And also options. When I say options, I'm not talking about the other derivative options. I'm talking about options. How do you take the trade on? One of the greatest things you can have to give yourself edge is the ability to see different options as to how you can take the trade on. If you've got that, then you've got the chance to add and add and add to leverage. That's where the top traders perform. It's not because they take more high quality trades and have a statistical edge. It's because once they recognize the trade's going in their favor, then they leverage the trade up. They have options and ways to get into the trade. So let's move on then. First up, we're going to cover gaining edge with indicators. So how you can use an indicator to give you edge. The most important thing here is your plan is paramount. I hate the idea or the assertion when people say, oh yeah, well, if you have this indicator, it will give you a trade. It will open the doors to many riches of different trades. And to be honest, that's just not the case. All an indicator is going to do is help you take an idea you've already got and refine it. Now, when I talk about a plan isn't the setup or the strategy or anything like that. A plan for a trade really comes down to you basically saying, right, I think the market is going to reverse. I think the market is going to continue, whatever you think is going to happen. So it's quite a generalized expectation of what's going to happen at a certain area, a rough area. This then can be refined down, and this is where indicators provide you accuracy and they provide you options on how you take the trade. So that's the way you've got to think about it. Plan, then access points. Where do you want to get into the trade? And then indicators, which are going to give you that refinement. So it aids the plan. It is not the reason for the trade. I've emphasized this already. And it's about giving yourself options. So let's go and have a little look at an idea. We've touched on this one already. I touched on it last week. We looked at the order flow on the breakout of this. But what I'm trying to get at here is your edge is from having different ways to take a trade on. And it also means you can get in the trade. Now, if you've got a basic plan, looking at this trade, the arrow at the bottom, that's your plan, right? The idea here is you're going to go and try and buy the double bottom, essentially. Market drops back onto the level at 65.83. You buy it to play the move back up, either to the recent low, 67.30, or the top of the recent range, 68.75. That's the plan. Now, where that is not a trade is the only thing that you could take from that is put a bid at 83 and get out at 67.30. Now, the problem you have with that is, of course, we don't get to 83. And the other problem you have with that is if you did get to 83, where's your stop? There's no defined point to place a stop. So whilst the plan is there, the idea is good, the viability of that trade is absolutely not there. You can't take that trade on. That's the way you have to think about it. There is no trade. All you've got is a decent idea that this could reverse. So this then comes back to making a decision and being able to say, right, we have now reversed and this is not a pullback. That's the crucial thing. I always get asked, how do you tell the difference between a pullback and a reversal? You can't. And that's something that you have to kind of get over, if you will. At the point where I've got that purple arrow point of the chart, at that point, this could be a pullback. We pull back to the recent low at around about 66.40, and then we continue on. This could be a flag, and you can look at that, down, flag, continuation. So it could be a continuation. It could be a reversal. Ultimately, that's what you're planning for. So you already know what you want to do. You can't buy the 83 because it never gets there. And the idea of, well, put your bid above the level. Well, if you're going to put your bid above the level, 84 then, 85, 86, 87. How about 95? How about 00? The putting your bid above the level isn't a solution, because you can always be above the level to the point you're buying it up here. And at that point, evidently, it is not a trade. So the question really that you've got to answer here, and this is where an indicator is going to help you, is the reversal actually on? So what you're looking for is information that can now identify this is a reversal and say, now you can get into the trade. For somebody waiting to buy 83, they watch this trade go by, they've missed it, game is up. And if you're very sort of simplistic technical, you trade it off a chart, you come down here, you put your bid there, you go home and you never got filled, didn't get the trade. What you're really looking at here then is information that's going to help you out. Delta, I talked about this in the last video that I did, and I explained that trade in just a moment, a little bit more detail. But Delta's rising. Now, what this is telling you is buyers are quite happy down here to come in and buy. Now, of course, that doesn't mean that a reversal is on, but it's tipping you in that direction. You already like the idea of buying it on the retest of 83. You also are now seeing that buyers also like the idea because they're willing to go and hit into the offers. So things are stacking in your favor. It still doesn't produce a trade though. What's going to turn this into a trade then is being able to find a little bit more information from an indicator. That volume increase that you start to see coming in here, and in particular on the candle that breaks out, that's the trade that you're after. Delta's already going up, so that's ticked one box. You've bounced off the level, all right, you've not touched it, but that's ticked another. You're above the pullback high, that's ticked off a third. So now you've got a defined trade. That's what you're looking for. This is the precision. This is what the indicator's helping you with. The indicator's saying, yep, all of these things are stacking up. You've now got precisely defined edge on this trade. You're not playing it from all the way down here. And you can look at that and say, well, you've missed out on you've missed out on 80 ticks. Yes, you have. But you couldn't have got in down here for one. And two, do I care about missing 80 ticks when I can get the absolute straight line move here? No, I'm quite happy with the straight line move. Also, with relatively small risk, you can buy at 66. That's on the breakout. Straightforward breakout trade. Volume ticked up, the Delta punches up. That looks perfect. I showed you the order flow on a trade like this last week. That's exactly what you're after. You've got a clear stop. The stop goes below this high, the previous one. That's at 45. Boom. 15 tick stop then. And you've got a target. The original planned target is 67.30 from the hourly chart. Target is reached. Possibly, dependent upon how it trades, you could then play for the other side of that range completely when it gets up there. That's something that we can look at next week when we look at order flow and how scalping can improve any trade. So we'll be covering that a little bit more next week. In this case, then, you risk 15 ticks, you get 70 tick payout. But that's all because the indicators have given you that edge. They've been able to say to you that, yes, this trade has gone from just a simplistic buy the level, and you can look at the probabilities of that working. But the probabilities of it working don't take into account the many times that it never actually gives you the chance to buy. Now you've got the trade. The indicator says go for it. You can play that break. It's all set already as to where you want to go. The plan comes into fruition. You get paid on that trade.